Hey everyone, and welcome back. Ready for another deep dive. Today we're taking a look at the latest global market movements and business news. It's your one-stop shop for feeling informed and ready to take on the day.
It's amazing how all these stories are like pieces of a puzzle.
Yeah.
Like they're all connected to these huge trends like technology and globalization,
Right.
even the political climate. It just goes to show that even things that seem isolated can impact the whole world.
I like that. Okay, well first up, let's talk Nvidia.
Okay.
Their Q3 results were amazing. 94% year-on-year revenue growth, data center revenue up a whopping 112%.
Wow.
But then their stock dipped 2.5% after hours. What gives?
Well, it all comes down to expectations. While Nvidia did better than most analysts predicted, their Q4 revenue projections, though still strong, were just a tiny bit under the most optimistic forecasts.
Interesting.
And here's the kicker. They're actually making more of those in-demand Blackwell chips than they thought they would.
Yeah.
But the demand is still going to be way higher than the supply.
So even with more product, it might not be enough.
Exactly. It shows just how much the market wants AI technology, but it also brings up some big questions.
Such as?
Can Nvidia keep up this crazy growth? What about the smaller companies in AI who can't get these chips? Does this create an uneven playing field? What about price increases if demand keeps outpacing supply? Things to think about.
It's a great reminder that we need to look past the headlines and see what the impact might be. Now, the U.S. market also had its ups and downs. The Dow Jones was up a little, the S&P 500 was flat,
Right.
and the Nasdaq dipped slightly. But get this, health insurance companies actually saw a boost after the news that Dr. Mehmet Oz might be tapped to head the Centers for Medicare and Medicaid Services. I have to admit, I wouldn't have connected a celebrity doctor with a stock market jump.
Right. It just shows that sometimes things that seem totally unrelated can have a domino effect. Think about it. If Dr. Oz gets nominated, his background, his fame, all that could really shake up healthcare policy, and that, in turn, could impact those health insurance companies.
Yeah, that's a situation to keep an eye on.
Yeah.
Now, while that was happening on Wall Street, global markets were also doing their thing.
Right.
Asian markets were mixed, with Japan and India seeing some dips.
Yeah.
And European markets mostly stayed flat. It was like everyone was waiting to see what would happen next.
Yeah, it does feel like we're in a period of real uncertainty right now, and that shows in how volatile the markets are. It's important to remember everything is connected. Even small changes in things like bond yields, the US dollar, or commodities like oil and gas
Right.
can have a ripple effect.
Okay, hold on. Break that down for me. What makes these things, bond yields, the dollar, oil, and gold, so important for the global economy?
Well, they're all linked in complicated ways.
Sure.
You can think of them as indicators of how investors are feeling and how healthy the economy is. Like bond yields, they reflect how confident investors are.
Yeah.
When yields go up, it means investors want higher returns because they see more risk.
Right.
Then there's the US dollar.
Right.
It's the world's reserve currency, so its ups and downs impact trade and investments all over.
And oil.
Oil and natural gas, well, those are basically the lifeblood of so much
Yeah.
transportation, manufacturing, you name it. And then there's gold, the classic safe haven asset. Its price often goes up when things are shaky.
I see. So if we keep an eye on those things, we get a sense of the market's mood.
Right.
Now let's talk about those whispers from central banks and economists. We have members of the Federal Reserve giving mixed signals, some hinting at interest rate cuts, others saying hold your horses. Meanwhile, the ECB, that's the European Central Bank, is waving a red flag about a potential debt crisis in the Eurozone.
Right.
But then some experts are optimistic about reaching inflation targets. It's kind of a lot to process.
It really is. It's because the economic picture right now is just so complex. There's no easy answer, and policymakers are trying to balance controlling inflation without killing economic growth,
Makes sense.
all while dealing with those debt levels.
Yeah.
All this uncertainty makes it crucial to stay informed and really dig into the data.
Agreed. Okay, let's get into some companies making waves. Palo Alto Networks had a great fiscal Q1, exceeding earnings and revenue predictions, but their stock still dipped almost 5% after hours. Plus, they announced a 2-for-1 stock split. Help me out here. They're doing well, their stock is more accessible, and the market reacts negatively.
It's a prime example of how short-term market reactions don't always match up with a company's long-term prospects. In this case, their success is driven by what's called a platformization strategy.
Okay, hold on. You're going to have to break that one down for me. What exactly does that mean?
Basically, they're shifting to offer a whole suite of products and services
Okay.
instead of just individual offerings. Think of it like, instead of just selling cybersecurity software, they're building a whole system of security tools that work together.
I see.
It's attractive to customers because it simplifies their IT setup and makes security easier to manage.
Sounds like a smart move for them.
It does seem to be paying off in their financials. But as for that stock dip, there are a few things that could be happening. Maybe some investors are cashing out after the stock's recent rise.
Right.
Others might have wanted even faster growth. And sometimes, let's be honest, the market just doesn't make sense in the short term.
That's true. It's a reminder to focus on the fundamentals and not get too caught up in the day-to-day fluctuations.
Yeah.
Then there's Snowflake. They had a bigger Q3 loss this year.
Uh-huh.
But you know their revenue beat predictions and their future looks bright. Their stocks surged almost 20% after hours. It's like two sides of the same coin.
It shows exactly why you need to look beyond just the numbers and understand where a company is headed. Snowflake is investing a lot in growth,
Right.
and the market seems to believe in their long-term success. It's a good reminder that with these fast-growing tech companies, losses aren't always a bad sign, especially if there's strong revenue growth and a positive outlook.
Are there any specific things we should be watching for when we're looking at these high-growth tech companies, beyond just revenue and profit?
Oh, absolutely. It's important to look at things like how much it costs them to get new customers, how many customers they're losing, and how much profit they make from a customer over time.
Right.
Those can tell you if their growth is sustainable and if they're building customer loyalty. You also want to check their gross margins, which tells you how much profit they make on each sale after subtracting the cost of making those products. If those margins are going up, it's a good sign the company's becoming more efficient. And lastly, you got to think about the overall market. Is the company in a market that's growing? Do they have room to expand their share? Those are all important when you're trying to figure out the long-term potential.
Great advice. Okay, now for some interesting moves in the business world. The Justice Department wants some big changes at Google, including maybe forcing them to sell the Chrome browser. That could be a game changer, right?
Oh, for sure. This move shows that regulators are getting more serious about big tech.
And their worries about stifling competition. It brings up some big questions about antitrust laws in the digital age. How much power is too much?
Yeah.
What does it mean for innovation and choices for consumers? Those are tough questions with big implications.
So it's not just about Google. This could set a precedent for how other tech giants are treated.
Exactly. It'll be fascinating to see how it all plays out. Then there's Target, missing Q3 earnings expectations and having a disappointing Q4 forecast.
Right.
Their stock took a 22% nosedive.
Yeah.
What's the story there?
Yeah, what's going on?
Target's problems reflect what a lot of retailers are going through right now. Inflation is hitting people's wallets, and they're cutting back on what they buy.
Makes sense.
Higher interest rates mean it costs more to borrow money, so people aren't spending as much.
Right.
On top of that, Target might be facing more competition online.
Yeah, that's true.
And people's shopping habits are changing. So it's a lot of challenges coming together at once. And then there's Starbucks thinking about selling part of their Chinese operations. That's a surprise. What's the strategy there?
Looks like they're rethinking their global strategy, especially in China, which was the huge growth market. But they've hit some bumps in the road, more competition from local coffee shops, and China's regulations can be tricky.
I bet.
So selling a stake might be a way to lessen their risk.
Makes sense.
Yeah.
By sharing the responsibility, right?
Right. It could let them bring in a local partner who understands the Chinese market better.
Interesting. It reminds us that even big global brands have to adapt.
They do?
And speaking of big companies, Ford announcing job cuts in Europe because of the EV market slowing down shows how hard this shift to electric vehicles really is.
It does.
This seems connected to what we talked about with Nvidia, right?
Yeah.
Are we seeing a change happening in tech?
Yeah, it's a fascinating link.
Yeah.
On one hand, companies like Nvidia are doing great because they're leading in AI. On the other hand, you have car companies like Ford hitting a wall as they try to go electric.
So maybe some areas of tech are booming while others struggle.
Could be. It shows how important it is to understand what's driving each sector's growth or decline.
And we can't forget the drama with the Adani Group. The founder facing charges in the U.S., their stock in free fall.
Yeah.
And they had to cancel a bond sale. It's like a financial thriller unfolding.
Is.
What are the big lessons here?
Well, it shows how even giant companies can be vulnerable.
Uh-huh.
Legal and financial mistakes can have a huge impact, not just on the company, but on everyone, investors, employees, the whole economy.
It's a reminder that doing things the right way is crucial.
Absolutely.
Being transparent, ethical, all of that.
It also highlights how interconnected the world is.
Yeah,
Problems in one place can have a domino effect everywhere else.
true.
Okay.
Okay, before we move on, any final thoughts on the big picture, the economy and politics?
I think the biggest thing is just recognizing that we're living in a time of a lot of uncertainty. Inflation, interest rates, geopolitical issues, and how much the government should be involved in the economy. It's all changing all the time.
It sounds like we need to be ready for anything.
Exactly. Staying informed, thinking critically, and being flexible are more important than ever.
Well said. Okay, listeners, we've covered a lot in this first part of our deep dive,
We have.
but there's still so much more to unpack and analyze.
Definitely. Stay tuned for part 2, where we'll go deeper into these stories and look at what it all means for the future.
So don't go anywhere. We'll be right back.
Welcome back. You know, it's really interesting when you think about how all these things we've been talking about, from Nvidia's AI chips to the possibility of Trump coming back, how they're all actually connected,
Right.
makes you wonder what will happen in the long run. Something to think about.
Always leaving us with something to ponder. All right, listeners, welcome back to part 2 of our deep dive. We've already covered a lot, but we've got plenty more to dig into. Let's jump back in.
You know, I think it's worth going back to Nvidia for a minute. They're like a mini example of this whole AI revolution that's happening right now.
That's true. Those Blackwell chips are in such high demand because they're what's powering all these next-gen AI applications.
Exactly. And sure, their projections for Q4 revenue maybe weren't as high as some people hoped,
Right.
but they're still expecting huge growth.
Yeah.
The demand for AI chips is only going to get bigger as AI becomes more a part of our lives.
It's kind of mind-blowing when you think about the potential impact of AI on everything. Healthcare, transportation, entertainment, finance.
Oh, yeah.
I mean, is there anything AI won't touch?
Hard to imagine any industry that won't be changed by AI eventually.
Yeah.
And as NVIDIA keeps pushing the limits of what AI can do, they're likely to stay on top.
But is there a downside to relying on one company for such important technology? What if NVIDIA has a setback?
That's a good point. Definitely a risk to think about. If something big happened to NVIDIA, it could slow down the whole AI world.
Yeah.
It could make prices go up, even create security problems if everyone's using their chips.
So it's not just about how well NVIDIA is doing, but also about the risks of having one company be so powerful.
Exactly. It shows why we need more options and competition in the AI chip market.
Okay, let's switch gears to the U.S. market. We talked about how the major indices did, but there's also the volatility index, or VIX, which went up quite a bit.
Right.
For those of us who don't watch the stock market all day, what does that mean?
The VIX, they call it the fear index sometimes.
Oh, interesting.
It basically measures how uncertain the market is about the future. It looks at how much the S&P 500 index is expected to swing up or down.
So a higher VIX means investors are getting nervous. Is that bad?
Not always. Volatility is normal in the market.
Sure.
Sometimes it means people are worried about the economy or politics. Sometimes it's just a reaction to some news or company earnings. The important thing is not to freak out over every little change in the VIX.
So how do we understand this VIX increase? Is it normal, or is something unusual happening?
To figure that out, we have to look at how the VIX has acted in the past. It's been pretty calm for the last few years, not moving around too much.
Okay.
So this recent jump does make it seem like investors are feeling a bit more uneasy than usual.
What could be causing that? We talked about the Federal Reserve sending mixed signals.
Yeah,
Could that be a factor?
definitely possible. When the Fed isn't clear about interest rates, it makes people unsure about where the economy is headed.
Yeah, makes sense.
That can make investors hesitant.
And what about the ECB's warning about a potential Eurozone debt crisis? Could that be adding to the nerves?
Oh, absolutely. The Eurozone is a big part of the global economy.
Right.
So any problems there can affect markets everywhere. A debt crisis in the Eurozone could be really serious for the whole financial system.
So we've got these economic worries, the Fed being unclear, and geopolitical tensions. No wonder investors are feeling uncertain.
It's like trying to sail a ship in thick fog. You know there are dangers out there,
Oh,
but you can't see them. And that makes it even more important to stay informed and be ready to change course if you need to.
Speaking of changing course, let's go back to those interesting things happening in the business world. The Justice Department's proposed changes to Google, especially the idea of forcing them to sell Chrome, that could really shake things up.
It could.
What are your thoughts on that?
It shows that regulators are more willing to challenge big tech
Okay.
and address concerns about their power. It could change how antitrust laws work in the digital age.
So it's not just about Google. This could affect other big tech companies like Amazon, Apple, and Facebook too.
Absolutely. It's a reminder that no company, no matter how big, is above the law.
And how might this sale of Chrome affect us, the people who use it every day?
That's the big question, and experts are still debating it.
Uh-huh.
Some say breaking up Google's power would lead to more innovation and lower prices for us.
Okay.
Others worry it would make the internet less unified and harder to use.
Right.
It's too soon to know for sure, but it'll be interesting to watch.
Okay, let's talk about Target. Their stock took a big hit after missing earnings expectations and giving a weak forecast for Q4.
Right.
What are your main takeaways from that?
Target's having a hard time, but it shows the bigger problems a lot of retailers are facing.
Okay.
Inflation is making everything more expensive, and people just aren't spending as much.
So it's not just a Target problem, but a sign of what's happening in the economy as a whole.
Exactly. Plus, higher interest rates mean borrowing money costs more,
Uh,
so people are holding back, especially on big purchases. And Target might also be feeling pressure from online shopping and changing tastes.
it's like a bunch of challenges hitting them all at once.
It is. It shows how important it is for traditional stores to change with the times,
Yeah.
to use technology and make shopping easy, whether you're online or in the store.
Now let's get back to Starbucks and their surprising move to maybe sell part of their business in China. What's going on there?
It seems like they're really rethinking their global plans,
Yeah.
especially in China, which used to be a huge growth area for them.
Right. But they've hit some snags lately, like more competition from local coffee chains.
Makes sense.
And China's regulations can be tough to deal with.
So is selling a stake a bad sign? Or is it a smart way to adapt?
It could be both. Maybe
Yeah.
Starbucks is feeling pressure and wants to lower their risk in China,
Yeah.
but it could also be a clever move to team up with a local company that knows the Chinese market better
I see.
and can help them navigate things there.
Interesting. It shows that even the biggest global brands need to be flexible and make tough choices.
They do.
Now, Ford's announcement about cutting jobs in Europe because the EV market is slowing down shows how hard this shift to electric cars is going to be.
It does. Going electric means overcoming big challenges in technology, cost, and infrastructure. It's not just about making the cars.
Right.
We need enough places to charge them.
And the price of electric cars is still too high for a lot of people. I'd like to drive one, but I just can't afford it right now.
A lot of people feel that way.
And it's a major obstacle. Electric cars are still pricier than gas cars, which keeps a lot of people from buying them.
But aren't there government programs to make electric cars more affordable?
There are, and those are helping people switch to electric. But
Uh-huh.
as the technology gets better and more cars are made, the price should come down, making them available to more people.
So it takes time.
Yeah, going electric is a long process. It needs consistent investment, new ideas, and teamwork between governments, car companies, and energy providers.
Okay, let's talk about the Adani Group. The founders facing charges, their stock is plummeting, and they had to cancel a bond sale. It's almost like everything's falling apart.
It is.
What are the key takeaways from all of this?
The Adani Group situation shows how fragile even huge businesses can be.
Right.
Mistakes, legally or financially, can have a domino effect, not just on the company, but on investors, employees, the whole economy.
It's a lesson in doing things the right way,
It is.
being honest and transparent.
Absolutely. It also highlights how connected the world is. Problems in one place can spread quickly and affect everyone.
It's true. We're all part of a global system.
We are.
Okay, before we wrap up, any parting thoughts on the bigger economic and political picture?
I think the main thing is recognizing that we're living in a very uncertain and unpredictable time.
Yeah, that's fair.
Inflation, interest rates, geopolitical issues, what role the government should play in the economy, it's all constantly changing.
It sounds like we need to be ready for anything.
You got it. Staying informed, thinking critically, and being adaptable are more important than ever. The world's changing fast.
That's for sure.
And those who can anticipate and adapt to change will be in the best position to succeed.
Wise words. Okay, listeners, we've covered a lot in part 2 of our deep dive. We talked about volatility in the markets, big tech being scrutinized, the challenges of going electric, and the ups and downs of big companies. But there's more to come.
Stay tuned for part 3, where we'll tie it all together and talk about what we've learned from all this business and market news.
We'll be right back. And we're back for the final part of our deep dive. We've really gone deep on some big topics today, from those market swings and tech shakeups to global politics and even how we work. So, as we wrap up, what are the main things you want our listeners to remember?
I think the biggest takeaway from all of this is just how connected everything is. We've seen how things happening in one place, whether it's politics in the U.S., a tech giant facing antitrust laws, or a business struggling.
Yeah,
It can have a ripple effect all over the world.
it's like that butterfly effect thing,
Yeah.
right? One little thing can set off a whole chain of events.
Exactly. And it's super important now to stay informed and see the connections between all these things that seem separate. It's about thinking critically,
Oh,
questioning what you hear, considering different viewpoints, and not just taking everything at face value.
so it's not just about reading the headlines. It's about understanding the why behind them.
Exactly. And it's about being able to adapt because things are changing so fast.
It's true.
The world is moving quickly. And those who can see the changes coming and adapt to them will be the ones who succeed.
Okay, let's bring this back to some of the stories we talked about. We talked about Nvidia doing so well in AI, but then Ford having trouble with electric vehicles. Is this a sign of a bigger change happening in the tech world?
It definitely points to a shift. Some parts of tech are booming because of AI, while others are struggling to keep up with new technologies and what people want. It's like we're at a turning point, and the decisions made now will shape the future of tech.
And what about Trump potentially coming back into politics? What could that mean, not just for the U.S., but for the whole world?
That adds a lot of uncertainty, both in the U.S. and globally.
Yeah.
His policies and what he says could really impact global trade, relationships between countries, even the balance of power in the world.
It's something everyone will be watching.
Definitely.
So, as you go about your day-to-day, listeners, remember, the world is complicated and ever-changing. But we don't have to feel lost. Let's use what we've learned to make smart decisions in our lives and our work.
I love that. We can't control everything that happens, but we can control how we react. By staying informed, thinking critically, and being flexible, we can handle whatever comes our way and even thrive in the middle of all this change.
Absolutely. And that's a wrap on today's deep dive. We covered a lot, but I hope you're leaving feeling energized and informed, ready to take on whatever comes next. Until next time, stay curious, everyone.